We now have a very relevant topic for all the entrepreneurs and for the startups who are present in this event today, which is on the next big opportunities in Indian insurance and the role of InsurTechs. This panel will explore what next waves of growth looks like for Indian insurance and how InsurTechs can accelerate some of it. Please join me in welcoming Rakesh Jain, CEO, Executive Director, Reliance General Insurance. He is a seasoned leader with over 3 decades of experience in insurance space. He has driven transformation and innovation across top-tier firms. I'll request Rakesh Jain to join us on the stage. Joining him on the stage is Dr. Sandeep Dadia, CEO, Country Head, Lockton, India. A doctor turned insurance expert. He previously served as the CEO of Aditya Birla Insurance Brokers Limited for 12 years and now leading Lockton India. We also have Amitabha, CEO Swiss Re India branch. He brings 27 years of experience with Swiss Re across Zurich, Singapore, Mumbai, and leading property and risk transfer innovation. We have Chetan Anand, co-founder, COO, Visit Health, a Forbes 30 Under 30 awardee. He leads digital health platform that serves more than 10 million lives in India. Welcome, Chetan. Coming next is Rajarshi, Director, Insurance Consulting and TT Data. He has 22 years of experience in global insurance consulting and leads digital transformation projects for insurance worldwide. To moderate the panel, we have Yogesh Agarwal, CEO and founder of Onsurity. He brings in expertise in digital health and employee wellness and will guide today's conversation and opportunities ahead. Over to you, Yogesh, to take us forward with this panel discussion. You have a mix of
Good morning, everyone. So, first of all, thanks for everyone to be part of this particular panel. Thanks to all the panelists who are there. So, I think we have just 35 minutes. So, that's why I will be very quick. Most of you would be knowing all the panelists, Rakesh sir, Sandeep sir, Amitabha sir, Chetan, Rajarshi sir. So, all of them comes from with great deep experience of the insurance market in India. So I will be very quick about going into the topic rather than just because I have some wonderful questions for all the panelists. So yeah, so starting with Rakesh. So Rakesh, so first of all, congratulations to be on the exciting development at your end of integrating InsurTech and Reliance. So first of all, very congratulations to you. Basically, we all know that Reliance or now InsurTech had always been a very diversified player in the market and had always worked with different distribution channels, be it banca, be it agents or brokers, and you have a very fantastic diversified largest portfolio. So now how you are actually thinking across in the new era of things, that what are the new next big opportunity that exist in Indian market, which has now been untapped, underserved, and which you think over the next 2 to 3 years, there is a huge potential for it to get developed over the next 2 years. So, yeah, Rakesh.
So, thank you, Yogesh, for asking a very pertinent question. I think, you know, my 25 years, and I've been a day one guy since the industry opened up. Mr. Mahipal Reddy will vouch for that, you know. Having said that, I would say that whatever we saw, learned in the last 2.5 decades, kind of is coming to, again, a big introspection in terms of what we need to do in terms of the next 25 years. The big shift is because of 2 reasons. Our business, if you really see, is based on 2 pillars, relationship and risk, you know. And both the things are hugely evolving. If you see in terms of relationship, we presumably mean customers. And the Indian consumers over the last 2.5 decades, have started to get moneyed, have started to pursue lifestyle, have started to do a lot of things where there are contingency involved. If you ask me, the number one risk people are today worried about is not just about fire, motor or health, it's about the economic volatility. We are a young country, demographically we are blessed and economically we are prospering. So insurance companies, if you really see from a relationship side, now needs to be more contextual. More contextual in terms of the new age of risks which are emanating. What are the new age of risks which people are looking at generally? Most of the people being gadgeted now, they're looking at cyber risks. Most of the people are now seized with the climatic changes, the climate risks. Of course, people getting leveraged, they're looking at economic volatility. And so many more things which are linked to lifestyle have started to emerge and are the ones which are centering, in terms of the need. Insurers have to now adapt to this. Insurers, when they look at their risk, the other pillar, now need to really go back and see the traditional model of on-the-shelf products which are being offered to a customer, is it making sense? And most of the insurance companies today are in that inflection point of change. Credit to IRDA also that about a year back, they gave a lot of, liberties in the way the product guidelines, the construct, the sandbox, the new ideas to come in. And along with the way the entire ecosystem is getting integrated digitally, I think there are a lot of risk parameters which are today available. And in my view, the next few years is all built around how do you contextualize similar types of policies to personalized basis with customers. And this is where I guess, the old mindset of tariff, which was like a standard mindset of offering, or maybe capacities, not even policies, needs to shift. And I personally feel insurance companies like us, who have seen, this transition taking place, are positioned well to adapt better. Because this is not about jumping in and managing it. This is about calibrating it for 1.4 billion people. You're not calibrating, you're calibrating for almost 15-20% of the world population. So this cannot be something which can be so near term that you really end up only looking at the business, numbers. You have to see the opportunity and the responsibility with which this gets built up. The sustainability of this is perhaps for many more decades to come. And as insurance companies, we have an opportunity to innovate and change along with partners like yourselves, the InsurTechs in particular, who are actually driving this ecosystem of, kind of creating an environment wherein the things are getting offered real time by insurance companies and customers are viewing this as a real support to the empathy they look out when an insurance policy is bought by them.
So, Rakesh, if you can throw certain examples of, let's say, a new InsurTech who really want to solve the problem of risk selection or customer engagement on building relationship. So what are the two domains or one or two domains which you think that would be a really great idea to build it across, and where those InsurTech can actually collaborate with someone like IndusInd or similar looking insurance companies in order to scale, in order to help them to scale faster. So what would be your key two things or one thing, what you would suggest?
So I'll give you a very simple, and a very contextual example. Yogesh, this is a field which creates so many things to do. But we are now very actively working with some of the map companies. See, most of us are used to handling insurance like a policy. We want to really parameterize some of the requirements because there is no way you can personalize it in the near term quickly. So we are trying to build an income protection cover which is linked with the way the weather is. We all know we have done agri insurance, right? We have done it very successfully with the help of government. How do we conceptualize this into our urban cities? And what we realize, the way the weather is, today also it is raining outside, there are a lot of people for whom that 1,000, 2,000, 5,000 rupees per day earning is very critical. So we are trying to work with InsurTech players in terms of contextualizing this delivery. Now what we need to understand, we are not selling an annual policy, nor can we sell it whenever somebody announces there is going to be a cyclone, right? You need to really run it in a manner wherein InsurTech players, come and collaborate with you. Now, thankfully, in the lending side today, a lot of fintech players are there who actually do a lot of distress financing. For them, this is another way of also covering their risk when they are extending those things to those same set of people for carrying out the economic activity. So this is one example which is helping us. The other thing is all around the LLMs and all, the way we are seeing, how, lack of better word, how frauds can be removed or reduced. How do we really make claims like a guarantee, not claims which is possible? To create a guarantee in terms of claim, what is equally important is to eliminate the misuses and misrepresentations, and significantly. What we clearly see, a lot of the data now falling in place. So today, for example, with the help of Google Maps, I can even know if a car gets accidented, what was the speed at which it was being driven, right? We can do the lanings. Connected world will give you a lot of data. If that data comes in your behavioral products like pay as you drive, pay how you drive, I think the claim can be guaranteed. Now, this is where the InsurTech really comes and changes for everybody. This is a win-win thing for everybody. Most of us today have to transition to that kind of a mindset. You'll be surprised to know that almost 10% of the incremental motor policies we are selling are now basically behavioral, parametric, pay as you drive, pay how you drive. A lot of the people also use their cars less, but at the same time, they are very keen to understand if the car is being driven by family members, the drivers, how it works. They are no longer scared about basic data sharing. They are shared about the more difficult ones. But I think insurance companies are not seeking so much that people feel their privacy is violated. And a claim is always going to be a huge amount for most of these. So InsurTech examples are abundant. Wherever I look, satellite imagery, for example. Satellite imagery today is throwing up so many opportunities today. Like one of the satellite link product we want to do is for the cattle insurance. The next big thing, the government obviously is also conceptualizing it. How do we provide cattle insurance coverage in this country? And that could be another revolution after agri-insurance. Now, structurally to manage each and every cattle is next to impossible. So some of these products, Yogesh, I think at the starting point, but the more innovation which comes from people, sitting in this room and around, I think we'll be blessed as insurance companies to work out our contingency-based insurance models.
Thanks, Rakesh. So just to summarize it across climate risk, parametric risk, and satellite imaging, and of course, a lot of potential to actually optimize the way how to see the risk on people driving and optimizing the motor insurance portfolio will be the key stuff some of the key stuff what Rakesh had mentioned it across. Now switching to Dr. Sandeep. First of all, congratulations, Dr. Sandeep, for bringing Lockton in India and effectively seeing such a large global insurance broking firm coming into India. It actually demonstrates the strong potential of the India as a market. Now, Lockton coming from a very large global perspective, what are the key areas that you and Lockton see it across, or a similar looking large MNC broking firm, in terms of untapped insurance market, or where there's a reasonable big opportunity that is ready to seize or needs to get developed to be seized? So what are your thought process and perspective?
Lockton is very large globally in terms of the insurance broking, and we have expertise across all the lines of business. But our key focus is in the initial years, first 2 years. One is, of course, the routine lines of business, and we call it as simple property, the marines, and the employee benefits, and we call it as people solutions, reinsurance facultative. But where we want to, in fact, add a lot of value to the Indian market is add some kind of flavor to the protection gap the country is undergoing. If you see the overall, the premium paid by an Indian consumer, I'm talking from a corporate standpoint, is significantly lower and nearly less than 1/3 or 1/4 to a global peer is paying. So which means there is a significant protection gap. And if I have to give a number to it, there is no number for India per se, but it's sub 10% overall protection gap, which means, the total losses incurred by the industry due to a Nat Cat peril, only 10% is insured. So remaining 90% is funded out of pocket, and which is a grave scenario. So we are trying to address this gap in the market We are also trying to give a lot of specialty solutions to the Indian market. So that is where our focus is going to be. And what I mean by, you spoke about the parametric. So there is a lot of concept on the alternative risk transfer. It may not be only a traditional product or a transfer through a traditional means. It may be an alternative risk transfer. And I do believe insurance company and InsurTech companies will play a very significant role in this entire aspect. So, I mean, it's going to be part of the ecosystem. So, I mean, earlier we realized it, that InsurTech are part of it, better it is for the industry.
So, Dr. Sandeep, effectively, Lockton has always built their business on trust, relationship. Now coming to India, which is a fast-moving digital ecosystem where it's most of the products and the market, be it like on the financial services, are being guided towards API first, embedded first. How are you thinking that how MNC broker like Lockton will mix those their relationship and trust building philosophy with the tech first? And how do you think that if there is any role of InsurTechs who are there in India to collaborate with MNC brokers and would really bring a very diversified and a complete risk-based solution to the clients?
So, I mean, it's a very valid question and it pertains to several other organizations who are, multinationally controlled. We are a fairly agile organization. For us, decision making is only 3 steps. So it's not a very long decision making process. So what we need to understand is, what people have not realized globally, India people have realized. Only solution to a technology is a better technology. There is no other replacement of a technology otherwise. If we are not changing our mindset, we use this word in the boardroom, there is a disruption happening in the market, and the choice remains with every company whether you want to disrupt the market or get disrupted. Of course, the choice is going to be we want to disrupt the market. Disruption cannot happen, and I would not want to use the word disruption as well. It's a new phase of business. Now, the future consumers of the insurance sector also is going to be millennial. Now, these millennials are deeply entrenched with the thought process of technology. If you are not able to bring in that technology in the field of insurance, I think the industry will not grow. So I do believe that those who are agile players who accept the technology faster than the others will do much better. We are very open to working with fintechs. We are already working with, I think, 5 or 6 of them to begin with. The proof of the pudding, I'll just give it to you. We are launching several other solutions in the market which are unique to Lockton world as well as India. So globally, there is nothing like a placement solution. We have a fully integrated solution right from sales to placement to policy servicing to policy administration and accounting. So it's like an end-to-end processing what we have created. We have built up facilities on technology platform for the insurance buyers, and which may be cedent, which may be an insurance company. So likewise, we are disrupting the entire market by way of speed. The biggest thing in InsurTech which is able to add, I think, compressing the process, reducing the turnaround time, avoiding duplication of work. There is a lot of work a broker is doing, there is a lot of work insurance company is doing. When there is an InsurTech which is happening, they compress the entire work. The operational risk is going down of a broker as well as an insurance company. Dependence on human being, it's going down. I'm not saying human beings can ever be eliminated. But I think collaboration now is going to be not between the humans. It's going to be, we'll have to adapt ourselves to work with machines. So I think we'll have to just start knowing that concept that it's no more a human being collaboration just required. Man and machine also will have to work together.
Great. So to all the InsurTech friends, I will just summarize it out, the main crux. So Lockton and the firm and the MNC's broker like Lockton are the decision-making process means first of all, what the very great news to the ears is that the decision-making process is fast to actually adopt, and definitely you would be working with local players also when it comes to technology and provisioning of technology, and not in those eras where the approvals had to come from the global office. So that's very great for InsurTechs who are building from India and for India. So yeah, thanks Dr. Sandeep. Switching to Amitabh. Amitabh, definitely you are part of Suzri, which is basically the largest reinsurer in the world. So from Suzri vantage point and your personal vantage point when you are the CEO of Suzri, what are the things that are the emerging sector or the product line or customer segment where you think that it's a big opportunity that exists and which will be ready to get decipher over the next couple of years?
Yeah, thanks, Yogesh, and it's great to be here meeting all of you. I think we can step back a little bit, and it's not always about new things, new age race. As Rakesh and Yogesh also said, we are a highly under-penetrated market in India. Now, look forward to Viksit Bharat 2047, and let's say we are a $20–25 trillion economy, and our penetration is of non-life insurance today is 1%. So at 1% in 2047, let's say if we are 20 trillion, will be a $200 billion industry. But if we double the penetration, we will just become a $400 billion industry, where from, let's say, about 40 billion today to 400 billion, that's 10 times. And this 10 times growth of the industry will happen from guys on that side of the room. Let me put that out to you guys. You guys have to get it done, okay? Now, breaking it down further, what's the under-penetration and what are the opportunities? First of all, I start with a very basic. 30% or even less than that of the farmers are covered. Why can't we take up the challenge to cover every farmer through technology today? The technology, satellite-based technology exists to give everybody a basic cover, which is a drop in yields. A farmer basically grows the crop, and he certainly has a yield which he has to produce. If he doesn't get it, he has a loss. Technology exists to just give him that basic cover. So every farmer, we should aim to cover every farmer through technology, right? Secondly, home ownership is really fantastic, but home, insurance is abysmally low at 2 or 3%. Unless you take a loan, you don't basically buy insurance. Now, can technology solve this problem? Because worldwide, it's just the reverse, It's home ownership and home insurance is very highly penetrated. And with the natural catastrophe and climate change, even areas which were not really, vulnerable to natural hazards are actually getting some losses these days. So where's the role of technology to create that awareness and bring out a product, including parametric product, which will bring value in the eyes of the consumer and ask them and think, make them think about buying home insurance for the first time, So there has to be technology which needs to bundle in probably services, which makes insurance as part of the whole, value that consumers see. That's the way I look at it. MSMEs is another area. Business interruption. Corporates, as I say, are, overserved and under-penetrated in terms of insurance. They, beyond a certain very top marquee names in our country, most people do not buy business interruption insurance. And you can have a small loss, but a very large business interruption claim. Again, there are various reasons for it. This is not the forum. But again, whether technology can, So, and going forward, next few years, 2-3 years, the areas of growth, I think, are around climate change, which is parametric. Of course, now the surety insurance is another very huge growth opportunity, where insurance companies have started competing head-on with the banks, and the bank guarantee, product is a huge, humongous field in which insurance are now starting to bite in. That's a huge opportunity. And of course, the other thing is on cyber. Cyber insurance is a big play, which I think eventually will be as big as property insurance. It's, at some point in time across the world.
Got it. So in terms of, one of the potential or the concern that always comes across, specifically in India, is about the capacity, be it like flood risk or natural catastrophe risk most of the times, and then the cyber risk as one of the thing. Because in the natural catastrophe and specifically for flood and earthquake, the market had always been lethargic enough to actually have the right risk models to enable capacity carriers like reinsurers and insurers to put their capacity in the market. So that was always like the one of the concern. And now with the cyber thing, and specifically sitting in Bangalore, working with a lot of technology firm, this particular constant keeps on regularly comes to us because most of our clients and customers are either like a first time or a very new tech entrepreneurs who just would have started, and for them getting a reasonable cyber cover is always going to be very difficult. So what would be your take in terms of how InsurTech can actually collaborate with reinsurers and insurers on actually bringing the right affordable cyber risk products to these small SME customers? Because see, ultimately how we look at it is that the losses that actually the market bears from the cyber risk is predominantly on the large risk, be it large MNC IT players. But the problem that actually happens is the smaller players like small tech companies where they don't get the cover. So how do you think that we can solve for it and actually build a right technology solution in order to promote or enable the large reinsurers to bring their capacity in India for the cyber risk?
Per se, I don't think there's a huge shortage of capacity. For the right price and for the right risk, there's still enough capacity available. But, specifically for cyber, my feeling is that, we insurers and reinsurers are still trying to understand the entire risk and the ecosystem of risk in cyber. It's a huge area. And then we stick to the safe, the corporates who prove that they have adequate risk management, they have adequate protection, they're investing in all the software for protection, and they have a dynamic, way of monitoring of the cyber threats. Those are the ones where the insurer or the reinsurer feels comfortable to give the capacity, right? So if I have to, the analogy is the same, why doesn't SME get business interruption cover? Because the data is not transparent and clear enough. I think there's a role of technology to basically make the underwriting possible for these risks for the underwriters so that they can provide capacity. There's a huge role of InsurTech in helping InsurTech get InsurTech cyber cover. That's what I want to say. Now how we will be able to do it is we have to sit across the table. But I would say that for the right parameters of risk, there is enough capacity available still in this area.
Thanks, Anand. So switching to Chetan, I think you being part of the health tech and InsurTech and GetVisit being means it's been like 7 years now for you guys to start. 9, sorry, my bad. So Chetan, you guys would be sitting in the midst of health, preventive health and health checkup data. So how exactly you think that health tech, emerging health tech can actually solve India under-insurance and underinsured problem, specifically when it comes to health insurance? And how do you think that technology can play a very vital role in enhancing it out?
So thanks Yogesh for allowing to answer this great question, and a privilege to be a part of this panel. So the market that we see today is fairly 10-15% of the urban market. There's a big missing middle class, which is underinsured or uninsured at best. There are gig economy workers, there are self-employed people. A large part of tier 2, tier 3, has little or no exposure to insurance, but they are transacting. They are doing a lot of medicine delivery. They are doing a lot of health checkups. If not, for a preventive cost, but for a curative cost, they go to doctors. So there is a lot of out-of-pocket or healthcare spend that is happening, and people have now shifted aggressively towards health tech platforms. People now want to do everything digitally, see all their health records onto one place. And that as a medium of exposure for people when you are getting a teleconsultation done, or when you are getting your health checkup report which shows you have a considerable risk in your cholesterol, or a slightly increasing HbA1c. Those are moments when people have the maximum I would say decision making potential. That is the time when health techs can nudge the users to buy new products. The entry barrier is very minimum at that point. We can ask for 1,000 rupees, 2,000 rupees basic cover, small episodic covers, get the people into the market. People are aspirational these days. They need good products. And in the previous panel, we had two health insurance companies and one life insurance company CEOs. They also talked about the need for a digital twin, the need for preventive ecosystem to be built. So health techs are the platform where the transactions are happening. Health techs can enable the penetration not only at the time of a need, but also at the time of a preventive care. There is also a very important use case when you talked about health checkups. Apart from health checkups, there are a bunch of transactions where a longitudinal health data gets created, mapped with the right tagging, which is ICD, LOINC, and other things that we do. We are able to get a snapshot, a continued snapshot for the end consumers. Now that data is very valuable from an underwriting perspective. Today, most of the underwriting is static, one-time underwriting, but to evolve from a person's moving lifestyle, moving health cycles, insurance companies need a lot of longitudinal health data continuously throughout the period of the person's health. So at that scale, I think it's very important for health techs companies like us, and there are so many health techs company, to build good infrastructure with consent, which can go back to the insurance companies and effectively enable them to co-create smart products, preventive care based, reward based products. Mayank was just talking about a product which gives you about 100% return if you are working well for your health. So there are ways where we can understand how people are doing, from tracking their steps to sleep to digital fitness. If you're going to your gym, you're doing your workout, how is your health data moving over a period of time. And insurance companies are also very, very I would say interested nowadays in terms of creating new products, smart engagement opportunities. And that, I think, with health techs being involved is a good opportunity for the entire ecosystem to build smart covers, build in protection, build in preventive covers. One very important aspect that we have seen and we're seeing grow increasingly these days is understanding where our consumers want to go. Especially in OPD, out-of-pocket spends, the kind of providers, the kind of care that people need is vastly different depending on demography, depending on the location, depending on tier. So there's a good care navigation, model that health tech companies also kind of bring into play. And it's very important for us to work with the insurance companies and help design products which are suited with the right audience. People who want to go to the Max Medantas of the world will have a different product. People who want to go to a gym, have a flex benefit, will have a different kind of product. So it's evolving, and I think we have a huge role to play in this.
Great, Chetan. So, so I think that's a very important piece, because when we look at it, and again, we also being part of the health tech and InsurTech, we see that there is a lot of longitudinal data that exists, specifically when we actually get the health checkup done. And to be very honest, I don't know why it cannot be used properly. Because when the insurer actually underwrite, they again have to, most of the times, or actually have to ask the customer to again go for the health checkups or to go for a tele-underwriting, and that can actually really enhance the penetration more faster, reduce down the underwriting cost, reduce down the friction that actually stays in the mind of the customer when they are purchasing health insurance. So definitely that would be an area that most both carrier like Indusend and Get Visit can actually work together. So moving, I think, in the seeing the interest of time, so Rajarshi, entity being the one of the largest, I would say, technology solution provider to financial services and insurance company vertical. And we have seen across all the conversation that how data and technology can actually drive the penetration. How you look, so now moving over to the next buzzword, which is AI, and we know that this is going to change everything what we were doing yesterday. So how entity, or how you in your personal experience when you are interacting with a lot of global large insurance players, not in India, outside India, how AI is actually bringing changes in terms of how the risks are being seen, and specifically in creating opportunities which were not being able to, or which did not existed previously because either those risks were too complicated to underwrite or too costly to underwrite. So how in your experience you have encountered these situations, and what are the key takeaways for India as a market from those case studies or research that had come across?
Sure. And first of all, it's great to be discussing the AI and InsurTech landscape in Indian context with this team panel. Now, a lot has been said about AI, right? Not only in insurance, but any industry across, right? So, we have been building a lot of use cases in AI, automation, and agentics, and working with the likes of yourselves, Chetans, right? I think it's a responsibility of IT players such as ourselves and InsurTech players like you to be able to create products and services that could serve the insurance industry in general, right? The frontier for insurance sales is already mature, right? You already see a lot of products in the space of smart quoting engines, intelligent customer journeys, smart devices. I think the next frontier is looking into the core of the insurance operations, which is into underwriting, which is into pricing, and which is into claims, right? So that's where the meat is going to be going forward, because that's the smart engine on which the insurance operations work, right? So how is it that we can automate, that we can digitize these? And what is it that AI can do? Look, traditionally, there are three layers of engagement in insurance business. There is the data store at the back end, there is the layer of transaction, and then at the top, there is the layer of engagement. The layer of engagement is already, is where, and the layer of transaction is where we need to look at what opportunities are there to bring in a smart automation, right? So let's take a commercial property as an example. So far, we used to have data, and that data was used by underwriters to assess risk on the property. But with the help of AI and agentics, we can look at things like satellite images linked to a property. We can look at drone footage. We can do flood assessment. And when you add up all of this information with the traditional available data sources, you have a whole gamut of data and analytics that you have at your disposal as an underwriter to create intelligent pricing. So risk selection, eligibility determination, smart underwriting, smart claims management, I think that's the next frontier where AI use cases are to be created. And I think the onus is on IT players, InsurTechs, is now to create those smart solutions for the industry.
Thanks, Rajarshi. I think we ran out of time. Otherwise, I was having one more interesting question about how the integration layer that would be going to work in order to enhance the penetration. If you could be very quick about it so that we can just cover that part, that how system integrators are working in order to enhance in order to make the insurance company market ready, which can again have its tailwind impact of enhancing the penetration.
Yeah. Look, technology players have propositional knowledge. We know what to do. And InsurTechs have something known as prescriptive knowledge. They know how to execute, right? And it's the amalgamation of what to do and how to do. That's where smart and intelligent solutions can be created, right? And I think that is how we are going to achieve the vision of insurance for all by 2047, as proposed by the Government of India and as proposed by IRDAI.
Sure, thanks. I think we all ran out of time. So thanks everyone for having such a wonderful discussion. Yeah, Dr. Sandeep.
Just wanted to add, you see the significance of such events where there is a technology involved. I've seen people from the ministry, I've seen people from the regulator who are coming and attending this. So I mean, it shows the quantum of work the government also intends to do to make insurance for all by 2047. So I think a great work done.
Yes, and of course, and I think
I will also add another point. You know, the amount of data, you talking health, you know, National Health Digital Mission is expected to generate 1.5 billion records in the next 2 to 3 years, every year. You know, 50% of the vehicle in this country in 2030 will be connected cars, for sure. The rest, of course, depends on how consumer adaptation moves. The entire country, we will be circled by so much of satellites. You know, that parametric data to the granularity, we will have, you know, when we do agri, you know, you are now getting images by 1 meter. You know, the amount of change which will bring in the way we look at things is going to be phenomenal. And to my mind, the outcome of all this is the way we look at it. And this is perhaps what we need to debate more. Are we really looking at the better way, a different way, or not? You can always survive in what you do for some time, but that's not the best way to give insurance for all. And insurance for all should mean comprehensive, full protection, not giving a policy and kind of tick boxing it to say, yeah, everybody has something. And many times you see the state coming forward to bring the biggest penetration. I don't expect that to happen anymore, because we are not a poor country. If we are going to be a developed country, insurance has to be by choice. And the protection should feel security and not a product. Yeah.
Great thought. I think we are very much confident, and specifically our generation who is coming in, definitely we all will contribute to how making India to be insurance for all by 2047. So thanks everyone for having such a great discussion. Thanks.